Hey guys, how are you today? Larry, Juan, Avodio, Earl, good to see you. Raymond, everybody okay? Hey Earl, good morning. Hey Larry, thank you for that. Thanks for letting me start a little later today. We needed to take my wife's older dog to the vet down the street. And she gets a little nippy. So thank you for your patience with that this morning. How much interest is there in reviewing this comparison between 2008 and 2021 that we started last week before the open? Any? If not, we can just close it out. Oh, yeah, you're right. Thank you. So basically, what we're looking at here is a comparison between what happened in 2020 versus 2008 and 2007. So remember that a lot of times these guys, they want you to believe that what you're seeing isn't what's really happening. So, case in point, there's been a disconnect between the actual economy and Wall Street. Meaning, while the economy was tanking, Wall Street's valuations were rising. And so fundamentally, we understood that there was sort of this second reality. And I think most of the world has seen it in full display. One of the other things to keep in mind is the news stream. The news stream that comes across. For example, as the market was rising, we were told that Wall Street had a historic number of puts. Puts are bets that the markets are going lower. Now that we're up at this level where things are expected to turn, there's an article that I read yesterday that said that the options are now net positive. The options are now net positive, which means that we're led to believe, or we're being told to believe, that banks are not as bearish on the market as they were a year ago, when a year ago everybody had a put in place. So I sort of see that as a, hey, come on in, the water's fine moment. Because back in 2007, when we were in this area right here, how many of you remember 14 years ago? Up until this point, up until October of last year, of the last recession rather, the market was rallying back into the all-time highs. It was rallying back into all-time highs. Now, Earl, Evodio, Juan, Larry, Raymond, were the underlying conditions of the economy any better on October 16th in 2007 than they were on the 22nd of July? Meaning, had mortgages and all of the collateralized debt obligations mysteriously gotten better and better, and people felt really good about it? Did the subprime applicants all of a sudden get new jobs and they had more money in their savings than anyone ever thought they did? Or was the world on July 22nd in 2007 worse than it was October 16th when we hit that all-time high level pretty much within a few percentage points, around 1400? Things were worse and the market went higher. Meaning, by here, by October 16th, we know now, looking back, all of the movies, all of the reports, all of the books, all of the deep journalism that was done, banks were well aware of conditions right here. Earl, would you say that's fair? A fair quote, a fair statement? When we came into the high and they pushed people up one more time, they had a net short position that no one knew about, with an instrument that they had created that we learned about later in the big movie, The Big Short. So when we look at the economic conditions, so what's the stuff here? Let's call this PARP. Paint a rosy picture. Okay, so what do we really know? The last unemployment report showed 1.2 million new applicants, right? We know that GDP is in negative territory. We know that there is no chance for a TARP package. Now, here's the thing about the TARP package, and I wondered what you thought about this. Do you think we had a window when the last PPP package ran out? Earl, you work with property, you work with tenants, you know people in that field. When that money ran out the first time, my belief, and I'm not an economist in any sense, my belief, people were bad, and then they had the bump. And then, Earl, right when it curled down was when the next PPP package should have come out, right? And Democrats said they had a package ready to go. All I needed to do is whatever you believe politically. That would have taken us kind of maybe back into this territory. But instead, what I think happened is I think this has been happening. There's been no help. There are no new jobs. And now in this area, here's what I think is happening. Mortgages are defaulting. Rent is late. Commercial real estate is defaulting. So there's this window where all of these bad things are happening. The unemployment rate is going up. Mortgages are defaulting. People are not paying their rent. There are commercial real estate markets all over the country that aren't getting, that are in arrears. And the market is, just like 2007, climbing into this double top with this very important October pattern kicking in. But no one is really talking about how bad things are, okay? We hear the people like Fauci and all the people in the CDC basically talking about the winter wave, the second wave, the third wave. And it's estimated that the coronavirus is going to eclipse. We're going to go from 200,000 to probably 400,000 in the US alone by the end of December, January, February. But would you, here's my question, and I'm honestly asking it, I don't have the answer. I have a guess. But if we look at this like a meter, in terms of over here, things are okay. And things are really bad. What do you think, or where do you think the needle is being broadcast in terms of what people are being told? What is the sentiment? What do you feel like we're being told and what's being projected and what's on the news and in the newspapers and on TV? I think it's leaning this way. I think it's leaning this way. We're being told things are okay. There's a virus and there's a vaccine right around the corner. Yeah, it feels like 60% okay. I have a friend who works in the semiconductor industry, and he has a tremendous community of people with the company. You may have heard of them, called Intel. Intel has told their employees stay home until June. That's June 2021. And he said, based on the conversations he's had with people there, they have researched, intensely researched what is likely to happen and what's happening and going through there. Asia news is getting better, right? China's GDP increased 5%. But remember how many deaths China said that they had in the coronavirus too, Raymond? Do you think anybody believes any reports coming out of China anymore? Yeah, we had 6 people died. 6 people died here. It wasn't that bad. And we found out there were pictures of people picking up the remains from crematoriums, and they had pallets after pallets after pallets of urns to put the ashes in. So that leads us to this chart. And there are some correlations here between 08, 07, and 2020. And they really do bear examination, closer examination, because there is sort of this timeline of appointments, timeline of things that are happening sequentially. And so if you imagine this sort of as dates where things happen, important institutional moments, we can sort of work our way through, you know, February 20th, then we have March, April, and so on, leading all the way up to and including this sort of tipping point that we're about to discuss. Juan says there were 12 positives in China the other day and they tested 12 million people. Sorry, but no way, I cannot believe that. Yeah, man. So what I did last week and when I started was a preliminary correlative analyzation. And we saw that there were some dates where things were happening. March into April, this sort of double bottom and then the leg up. And when we came back and looked at what was happening here on the right-hand side, we see that March into April has that same bottoming effect. And then Avodio, the run up into June 5th. We then see the leg down into June 27th. And on the right-hand side, we see the leg down into June 27th. So there are some differences in the heights of the waves, meaning February 20th was above the June 5th high on the right. February 20th was below the June 4th move. But you can clearly see there are legs, leg 1, leg 2. Whoop. I'm hitting the escape key. Leg 3, and then leg 4. And over here, it's the same thing. And I really, over the years, I'm enjoying, I love this part of it, sort of exposing the puzzle. Leg 1, leg 2, leg 3, and then a small leg, but it's there, meaning I don't have to work really hard to convince you the market fell from June 5th to June 27th. It's there. Okay, now on the left side, there was a high at July 22nd. Now, here's what I want you to see. If I blow this chart up, one, can you see right here that there is a pivot? And the high of that pivot, even though it's small, the high of that pivot is right here on July 22nd. So this date was a meaningful date to institutions. There was some kind of benchmark right here that they had to finish and complete. Okay, we see over here that the next turn, the major turn, was August 16th. So we'll come here and we'll put a turn 816, and we'll put a double green arrow right there, triple green arrow. Now over here, we'll find that same date, August 16th. It's right there. August 14th, August 17th, right here. So I'll type 816 here. So there are all these pivots that are there giving us some clues, some very strong clues. Now it's not 100%, right? But it's probably in the 80, 90 percentile. And at 9/11, we see there was a pivot. No, I'm sorry, September 1st, not 9/11. So the next push up here into the high was September 25th. September 25th on this chart is a major reversal. And then we saw October 16th on the right versus October 16th on the left, which brings us to modern day, present time analysis. According to this chart, we'll pull over 925 like that, 925 like this. Everybody following me so far? Is there anyone not following what I'm doing? Okay, and in both cases, the October 16th high, the retest, was lower than the initial high to the left. So I have a lower high right here. I'll put that right there. Okay, so the next date, the low, is right here. The next date is the low right here, 10/22. And so that's what we're looking for. That today's the 20th, 21, 22. So if I have to guess, I'm seeing 10/22 over here as a potential bottom. And then October 31st, you'll see one of the things you'll notice about the 22nd, Earl, is it's a plunge day. We have a low close. It feels like in the mix, there is a holy crap day followed by maybe things aren't that bad day. The candle on the 19th, which would be pretty close to today, and again, just for the sake of this video, in case this actually happens, and people say, he couldn't have known beforehand. What time is it right now? It is 9:31 Eastern, Tuesday, October 20th in East Bend, North Carolina. I click on that link. That is the time. I click on my computer clock. That is the time. This is where we are as we make this video. According to this, today has the potential to be a very bad day. Today or tomorrow is a runaway sell-off. And it will freak people out. And it will close near the low. And if what we're about to see is anything like 2007, 2008, the very next day, Tuesday, Wednesday, we have these wicks down into that area, okay? So that's what I'm looking at. If I look at this candle right here, I'm going to just do a little quick analysis. The high, the bullish candle right here, I'm going to compare it. Let's put a note right here. I'm going to call this candle candle X. It's the last high close signal right here. You see that candle right there? I'm going to compare that candle Earl to this one right here. And I'm going to measure that candle, the body of it right there. So on the left-hand side, that move was about $16. On the right-hand side, that move was $70. Now, here's what I'm going to do. Ready? 1 copy, 2 copy, 3 copy, 4 copies down. So here that would be 1 copy, 2 copy, 3 copy, 4 copies down. That would put us, that would be a really bad day. I don't know if it's possible, but that would put us at 3198 or 3200. Now, if I look at it an alternate way, how many distances is this candle? It's 1, it's 2, it's 2.5 of the primary. So if that were the case, it would be 1, 2.5. That would put us at 3267. 3267, 3250. So I don't know if that's going to happen. I know the big date is October 31st. So we're watching down into 1022, wicks, up into October 31st, high close followed by another panic day. There appears to be 2 panic days in the schedule. One right here on the 19th, today's the 20th, and then another of equal size on the 1st of November. And they are the same size. The next date where the pivot comes in is November 5th. Whoop, just click the button, Lydic. What is that? 11.5 right here. 11.5, 11.6, and here's November 7th. These are the dates where stuff goes down. 1022, 1024 is the other wick day. Now, the only reason I suggest we look at any of that stuff is because of what has happened so far in relation to what's already taken place at those dates. And that's all I got. I remember back in December, if we go to our YouTube channel, I did a very similar analysis. And I was right, or what we were expecting actually transpired. So if you remember when we did this analysis back in the end of December into January, we were predicting at the time that the market would pull back down to 2,300. And it pulled back into 2,300. And we nailed that date using the same analysis technique that we're using right now. So keep an eye on it. We'll watch it and see, but watch for movements at those dates, pivots at those dates. They may even be opposite of what we're expecting. These dates may be highs instead of lows and vice versa, but the direction we go into that date is usually the opposite of how we come out of that date. And that's all I have to say about that. Any questions about this? Any questions about this?